Morning, everyone. Welcome to the ninth series of the RCI Pod webinar. Uh, Good morning. Today, the topic of the RCI Pod webinar is Advancing Asia's Payment System Through Financial Technology. As we all know, payment system is very essential. It's like the bloodline in terms of the human system. It is a key enabler of business, and more recently, the digital economy and the application of financial technology has seen the growth of fintech-based payment system, such as mobile payment, digital wallet, e-money, among others. And these payment system are quite front and center in terms of e-commerce. It facilitates customer-to-customer transaction as well as customer-to-business transaction. In a way, they affect many key dimensions of digital payment systems, such as efficiency, inclusion, and stability. And this is what we will be talking about today. So let me introduce our ERCD intern for this year, Miss Yaoling Huang. Presently, Miss Yaoling Huang is finishing her PhD in economics at New York University, and she covers the following research areas: macroeconomics, productivity and growth, innovation and digital economy. That's why she's doing a paper on the fintech payment system for ERCT. Ms. Xiaoling holds a Bachelor of Science in Philosophy and Economics and a Master's of Science in Economics, both from London School of Economics. Yaoling, the floor is yours, and you have 35 minutes for your presentation. May I ask all the participants and audience to also mute their mic? Thank you.
Thanks, James, and thank you, everyone. Thanks, everyone, for coming to listen to my presentation on my internship project, Advancing Asia's Payment Systems Through Financial Technology. So just to begin with, I want to highlight some like why digital payments or fintech payments are very important. As we see, fintech industry is developing in Asia, and actually, according to data from Statista, digital payments is one of the most important business model type amongst other or a variety of different fintech services offered by the fintech industry. As we can see, the transaction value and in terms of the users, digital payments occupy the highest share relative to other types of fintech services, such as personal finance, which is related to financing, wealth management, or alternative lending or alternative financing, such as crowdfunding or P2P systems. So digital payments is also a very important area that we need to study, is because it's it promotes financial innovation. And this is very relevant for developing countries' development agenda. Based on the definition from GSMA, actually they define mobile money. One of the criteria that payment system qualifies mobile money service is that it must be available to the unbanked. So the unbanked are the groups that are previously not touched by the formal financial system, and is now being be able to enjoy the developments of digital technology. And according to CCF study, we see that 25% of the customers of digital payments are actually unbanked customers. And this is actually the highest compared to other type of fintech business models. So in today's presentation, we'd like to deliver the following key messages. First, we'd like to use a couple of stylized facts to show that fintech payments such as e-money and mobile money are growing rapidly and revolutionizing retail payments, especially in emerging economies. We'd like to say that fintech payment makes retail payments more efficient in terms of being cheaper, faster, and safer, more transparent and inclusive. It also leverages strong network effects, which is a very special nature of digital or platform economies, through three essential characteristics, including big data, broad customer base, and multi-purpose technology. And it is an enabler for e-commerce, fintech, and financial inclusion. In light of COVID-19, we're going to also provide some examples of how fintech payment systems are used in the delivery of cash assistance during cases of emergency, especially the digitalization of G2P or G2B. And finally, in terms of policy recommendations, the key messages are that policymakers are encouraged to bridge existing regulatory gaps to reflect key changes of digitization, expand access, particularly to the more socially disadvantaged groups, promote regional cooperation, and for governments, they can also leverage digital tools in their own business practices, such as digital G2P or G2B system or central bank digital currencies, and encourage fintech providers to constantly leverage the latest technologies to upgrade cybersecurity measures. So just an agenda of today's presentation, I'm going to first talk about the current fintech payment system landscapes, and I'll begin with kind of definitional part of what we refer to the key terms of fintech payment system and what we have in mind when we what's the focus of this study. Then we're going to move on to a country case study by looking at People's Republic of China and how that affect e-commerce and fintech development especially. Then we're going to extend to more cross-country framework and look at remittances, e-commerce, and informal economy, and finally consider the challenges of fintech payment systems and new emerging issues and offer policy recommendations. So just to begin with, this is an illustration that classifies different types of payment systems. And here, the leftmost hand side are, so payment system have essentially two kind of important elements for it to operate. One is the financial aspect, where financial intermediary aspect, where it connects the two parties, the payers and the recipients of a transaction. And the other part is the technical aspects, where say digital technologies are involved in order to provide infrastructure for the transaction to happen safely. So in terms of payment system, the leftmost box are payment systems that are actually involved the most highest degree of financial component, but as opposed to digital or technological component. And there are more traditional ways, such as use of cash, bank drafts or checks, and letters of credit. And these all involve, say, going to a bank, and you have to be sometimes physically visit there, and so on. And then with the advent of digital technologies, there are more, as I say, traditional digital payment system, which include, say, debit cards, credit cards, electronic funds transfer, and for settlement and clearing, we have ACH and RTGS, which allows for faster settlements and more secure settlement. And recently, we've seen that digital, payment systems are further digitalized, and this is where fintech payment come into play. And this is this box in pink reflects the most modern digital payment system, and this is what we have in mind when we say fintech payment, which includes things stronger leverage of the internet and also smartphones, such as the use of mobile payment platforms, apps, digital wallet, and e-money. So the rightmost box represents the platforms, payment systems that have the highest level of digitalization. And this is what we refer to as fintech payment system this is what we have in mind. So our focus of the study would be retail payments mostly. So that would be the main focus of the study. And retail payments are payment systems that transfer large volume of funds of relatively small value, as opposed to wholesale payments. And this is here are some examples of retail payments. They can be C2C platforms such as Venmo, Zoom, where you transfer money across, amongst your friends and family, and via TransferWise. These are examples of payment systems, remittances transfer systems. Or C2B, it's I think probably we will be the most familiar with this segment and how it is affecting our life. We use Google Pay, Apple Pay, and I heard in Southeast Asia, GrabPay, Gcash, and of course in China, Alipay, WeChat Pay, and also a lot of the merchants are offering their apps where you can store money and having an e-wallet function. So these are C2B type systems, and of course B2C systems. And finally, in light of COVID-19, we're going to also touch on the G2B and G2B payment systems, where the government use mobile methods, for example, to deliver cash transfers. And this is particularly important because, as we can see from this graph, this figure, that within digital payments, actually 52% of the customers are actually individuals, and 26% are small and medium enterprises. And these are likely to be the players who use retail payment systems the most. So let's move on to stylized facts. In the paper, there are 10 stylized facts, and in this presentation, I'm going to only touch on limited four of them. So first of all, these two graphs show the average value per transaction by cashless payments instrument, and on the right-hand side, it's by the card and e-money instrument. And as we can see here, that e-card and e-money are actually having very, very small average value per transaction. So this is most likely to be involved in retail payment system. And zooming into this category, so I've divided them into three categories. They're not exhaustive, but they're the most important ones. And as we can see, e-money, which is probably the closest related to what we have in mind as, say, qualifies FinTech payment system, actually is able to accommodate even smaller value of payments compared to, say, debit or credit cards. So this is potentially e-money or FinTech is potentially revolutionizing retail payment systems in this way by accommodating even smaller value of payments. And in this way, the kind of convenience or transparency benefits of debit and credit cards could be further leveraged by e-money. So now these two figures are related to mobile money, which is a particular type of FinTech payment system again. And mobile money, as we can see, both in terms of transaction value and transaction volume and transaction value, are growing exponentially. And it's most widely used in sub-Saharan Africa, as we can see from this green area, and followed by South Asia and East Asia. So mobile money is highly relevant for us, for Asia. And this graph now shows mobile money transaction value by their types of usage. And as we can see, these mobile money transaction value is the highest, is the most widely used for P2P purposes, followed by cash in, cash outs. And as later I'm going to argue that because cash in, cash out is very important is a very important area that mobile money services is providing. So this is the final stylized facts that I am to cover today, which shows the share of the, say, users or sender, payer, recipients, or say some individuals who perform a certain activity using mobile phone as opposed to other payment methods such as cash or financial accounts. And as we can see, these, up to 2017 at least, the top three broad categories of mobile phone penetration are accessing accounts, remittances, and utility bills payment. And payment penetration, mobile penetration, G2B or G2P, is rather limited. However, I want to say that in light of COVID-19, probably things are going to change. Because of COVID-19, we've seen a lot of benefits of digitalizing G2B or G2P payments. So there are a lot of examples of countries that are leveraging fintech payment systems to deliver transfers to their citizens. For example, China is delivering consumption coupons via Alipay and WeChat Pay. India is leveraging its JM Trinity. Thailand used prompt pay to deliver direct cash transfers. And for Chile, they have this Bono COVID-19 program. And of course, this moving G2B and G2P to digital platforms are very helpful. As we can see from this study from Bangura, who studies how mobile G2P delivery of payments to frontline workers in Sierra Leone during Ebola, is estimated to having to save costs by more than 10 million US dollars. And of course, the reason is very simple, because it makes distribution of funds much more inclusive, targeted, and more importantly, safer, timelier, and transparent. So it's easier to verify, to deliver them to the right people, and also avoid unauthorized deduction by, say, managers, compared to if they're delivered only in cash. And so this is potentially an area of future development that we can see transforming further the payment landscape. So takeaways. So fintech payments are rapidly growing and revolutionizing retail payments, especially for emerging economies. Mobile money is very widely adopted in Asia. Mobile money is most widely adopted for P2P and cash in, cash out. And the top three categories of activities of mobile phone penetration are account access, remittances, and utility bills payment. And finally, COVID-19 is likely to speed up the digitalization of G2P or G2B payments, which is going to give us huge benefits. So in terms of the related literature, this paper is going to study China. So it's a contribution to the fintech payment in China. And it's discussing fintech payments in the pandemic, and also more broadly how fintech payments is affecting the overall economy, which is a very hot issue nowadays. Now moving on, the case study of China. So this is I wouldn't, because it's very new topic, and of course it's very new. It's something that's very, new and emergent thing. So of course data is limited, and so we're making our best effort to try to move away from narratives to a more empirical study, to look at the evidence. But it's definitely nothing extremely hardcore saying, oh, it's definitely causal, but it's a step forward. So we're going to leverage, exploit province-level variation in fintech payment system to study its role on e-commerce and fintech development. These are important areas because there are studies showing that actually e-commerce is benefiting mostly, especially people in more remote areas and smaller cities. So it's very important for inclusion. And fintech payments, fintech development is also important because not only is it going to increase efficiency, but it also increases financial development and the overall development of the economy. So these are very important areas. And we're going to use PKU's Digital Financial Inclusion Index of China. PKU DFIC, and the provincial data from the National Bureau of Statistics. And this gives us 31 provinces and from 2011 to 2018, which exclude only Taipei, China, Hong Kong, and Macau. So just to provide some intuition about how e-commerce or fintech services or G2P could be related to fintech payments. So I think it's probably nice to walk through an example of Alipay. Alipay is the leader of China's fintech payments, capturing more than half of the market share in fintech payments in 2020 Q1. And there are 1.2 billion registered users in 2019. So it's one of the iconic provider of fintech payments. So the history, how it is related to e-commerce. In 2004, Alibaba's e-commerce platform Taobao incentivized the introduction of Alipay because China's electronic payment system, such as e-banking or debit credit card system, probably not as developed, and because e-commerce, it might be easier to just use to kind of do cash transfer. So this kind of inspired Alibaba to develop Alipay. And then, of course, Alipay has Taobao's customers, so it further facilitates payments in e-commerce and attract more e-commerce customers as a result. And up to 2017, there are approximately 85% of internet purchases are paying online rather than using cash upon delivery method to pay. And Ant Financial, as a provider of Alipay, introduced numerous other fintech services. For example, Yuebao, which serves saving and investment. Huabei and later Ancheck provides credit payments. Jima Credit is a service for credit scoring, and Fortune for wealth management. And during COVID-19, Alipay is used for G2P in the distribution consumption coupons to citizens. So, now let me introduce you a little bit to the PKU DFIC data, which will give us our main variable of interest. So this is the data that is leveraging the massive data set from Ant Financial, the provider of Alipay. And Ant Financial is a provider of all those fintech services as well. And this doesn't, of course, it's belong to it is a subsidiary of Alibaba Group, but it operates separately than Taobao or Tmall, the e-commerce platform. So e-commerce is not included here. And we're going to use the payment index, which is a composite of the following indicators: number of Alipay payments per capita, amount of payments per capita, and proportion of number of high-frequency active users. And for instrumental variable, we're going to use the log of the insurance index, which is a composite of these three things: number of insured users per 10,000 Alipay users, number of insurance policies per capita, and average insurance amount per capita. So, in this slide and next slide, I'm going to show you the evolution or say some stylized facts about this payment index. So as we can see from this time series plot, that payment index is converging, which means that, and here, as we can see, those who have the highest, lowest number of payment index in 2011 is also having the highest annual average growth rate. So this shows that less penetrated regions are catching up in fintech payments, although this graph shows that fintech payment is still correlated with GDP per capita. So more advanced regions also having higher FinTech payment index. So this graph also holds in 2018. Okay, so let's move on to the regression results. So we're going to regress. The main dependent variable is taken from the National Bureau of Statistics, which is province level, and it's the log of the e-commerce. The log of e-commerce sales plus the log of plus e-commerce purchase, and this is compared to the payment index is not only leveraging Alipay, but it's an overall index. So, and as we can see from the regressions, column 5 is the pool OLS result, and as we can see that it's very significantly associated with e-commerce, and if we control for time fixed effects, and this association is stronger, and with if payment index increases by 1.5%, 1% is going to lead to a e-commerce value being increasing by 1.5%, and just of course, it's very hard to map because this is an index, so it's probably very hard to map it to the actual, say, numbers of purchase, number of, say, FinTech users. But just to give you like an idea of the scale, payment index grew from roughly an average, national average of about 50% to 200 of about 50 to in 2011 to about 250 in 2018. So that's roughly 460% increase. And moving on, we see that the log GDP per capita is not surprisingly positively related to e-commerce, and the rural population negatively related to e-commerce. Moving on, so this panel structure, by using a panel structure and also some controls, is probably going to move us a little beyond the narratives and think about the effects. And of course, this is relationship between e-commerce and payment index is definitely very intertwined, as I also talk about in the history of Alipay. So it could be because there are factors affecting both e-commerce and also FinTech payments, such as increase in digital technology. But this is pretty much captured by, say, the log of broadband use subscribers. And another criticism about another, correlation type argument is that maybe it would be it might suffer from reverse causality. For example, e-commerce giving you more customers for FinTech payments and stuff. So in order to tackle this androgeneity issue better, we're going to use the log of insurance index as an instrument for the log of payment index. And this is because it's probably, we can think that payment index is going to affect e-commerce. But this insurance index it's very hard to think about insurance index why insurance affecting people's online shopping behavior. So and the result is fairly robust. It's increasing by about 0.2. And again, this GDP per capita and rural population have significant effects. So now moving on to FinTech development, we use this graph shows the pooled OLS result, and and as we can see that this is positively associated with different type of fintech services, and the ones that are benefited most strongly from fintech payment are money funds, investment and credit investigation. And this is pretty consistent with the fact that actually Yuebao, which offers investment and saving services, and Jima Credit are actually very well developed services by Alipay. And here, what is also noticeable is that we see the log of GDP per capita is negatively associated, moderately significantly associated with the log of fintech product type. And this might give some reason for the financial inclusion argument, because probably fintech money funds or investment credit investigations probably giving access to people who lack who in more impoverished areas and lacking access to formal financial services previously. So the takeaway is that regional inequality, fintech payments penetration is exhibiting regional inequality, but less penetrated regions are also rapidly catching up. Fintech payment is an enabler for a variety of activities like e-commerce, fintech and financial development, financial inclusion, and digital G2P or G2B during crisis time. And this is going to help in terms of inclusion and resilience as well. So now let's move on to cross-country analysis. So in our cross-country analysis, of course, it's even more difficult to claim causality. So but then we use cross-country data in digital payment system to study its relationship with e-commerce, domestic remittances transfers, and the informal economy. And of course, these are domestic remittances transfers and informal economy are very important for developing countries. So, and then our goal is to just use data and look if these patterns are in line with a lot of narratives. So the data we're going to mainly use is the Global Findex database, and for e-commerce we're going to use Euromonitor Passport, and for informal economy we're going to use Medina and Schneider's measure of informal economy. So the main variable of interest is the share of population aged more than 15 years old who has made or received a digital payment in the past year. So this, of course, a disclaimer is that because it's so new, so cross-country data is still very lacking in this area to point specifically to a fintech payment. As the case in China, we can specifically point to Alipay and use that as our fintech penetration measure. But here, digital payment includes things like credit cards, debit cards, and also mobile payments. So this, so that's why I'm saying in later it's digital, how digital payment system is affecting the economy. So as we can see from this OLS results, that still this positive and significant relationship still hold in cross-country data. And also here in cross-country data, we can see also the importance of broadband access on e-commerce. And moving on to remits, because I'm short of time, so moving on. So I'm just briefly argue. So in terms of, what are the patterns in the data in terms of the relationship between digital payments and domestic remittances transfer? Well, we see that there is a decreasing share of domestic remittances transfer that are conducted in cash, but an increasing share of them are conducted in financial accounts and mobile phone. And the kind of decrease, the amount of decrease is roughly divided half-half by either by financial accounts method, and half of them are, met by, half of the decrease of cash is met by, say, mobile phone, half of the decrease is met by the increase in financial accounts. And the share of population engaged in domestic remittances transfer is negatively associated with cash or in-person transfer, but positively associated with accounts transfer. And this positive association is mostly driven by mobile phone rather than financial accounts. So there is not much of a, as we can see, there's not much of an kind of association between the financial institutions penetration and the share of population who perform the activity of sending, receiving remittances, but a positive one for mobile payment. Okay, so in terms of the informal economy, the recent BIS paper also provided this argument that potentially digital payment is going to decrease the size of the informal economy by plotting a scatter plot, and we show the evidence for Asia as well. And to move a little bit beyond that, we control for income group and then divide that group by whether they have above average or below average digital payments. And as we can see, this relationship between digital payments and the informal economy is weakened for the treated group, that is the group of countries that have above average digital payments penetration. Okay, so now let's So this takeaway is that we provide suggestive evidence of digital payments to increase e-commerce positively associated with the share of population engaged in domestic remittances transfer and decrease the share of the informal economy. So now let's think about the challenges and policy recommendations. So taking stock, what we've seen is that how FinTech payment contributes to financial inclusion, G2P, G2B during COVID-19, e-commerce, FinTech development, domestic remittances, informal economy, which gives a bunch of benefits like inclusion, efficiency, transparency, security, network effect. Now I'm going to argue that these areas are double-edged sword in the sense that for example, it provides efficiency and convenience, but we should be very, very cautious about the groups of people that this service is delivering, and be aware of the potential payment divide. That is, for example, the less tech-savvy people, for example, the elderly, or those who lack access to devices such as smartphones or connectivity. Typically, the poorer, lower income or socially disadvantaged groups are cut off of enjoying this benefit. And also we should be aware that digitalized payments doesn't mean abolish cash, and cash provision is especially important for the lower income groups. So we shouldn't miss those already socially disadvantaged groups. In terms of transparency, the additional benefit of added transparency of digital payment is that it facilitates electronic record keeping, and that could help with the detection of money laundering or fraud. And it also expand access of credit services to unbanked, because now there are data of the unbanked people, their financial transaction data, so we can provide credit services to them now, and also better target the most vulnerable individuals or SMEs during crisis. However, this increase in big data is going to cause some privacy breach issues that we need to address. Thirdly, in terms of security, of course, electronic record keeping is helping with consumer rights protection. During COVID-19, of course, it's safer, has less health risk to deliver things, contactless payments, or that doesn't rely on face-to-face interaction. But we should be aware of the potential of cyber attacks and network disruptions that lead to system collapse, and also new forms of illegal activities such as identity theft, cross-border crimes, because it's probably easier to transfer money now cross-border, and also cyber attacks. And finally, in terms of network effect, of course, the platform nature is very attractive. The leverage of big data, broad customer use, and multi-purpose technology is going to help firms to better target customers, and also help governments target the most vulnerable individuals. But this excessive market power is going to create issues that might harm consumer welfare. So based on that, we offer the following policy recommendations. For policymakers, they can think about, of course, they need to take into account of these emerging issues created by digital technology and address using regulation, such as in terms of data privacy, antitrust, cybersecurity, and identity theft. And in order to reduce excessive market power, interoperability should be enhanced. And this is probably very difficult for, this needs that government to step in, because it's probably very difficult for firms to voluntarily want to be interoperable. And in order to prevent this payment divide problem, government might make effort in terms of financial and ICT literacy and provide the necessary digital infrastructure. Also, in prevention of potential cross-border crimes, regional cooperation, cross-border crimes, very important, and payment system integration is extremely important for cross-border transactions. And of course, government could also leverage digital technology in their own business practices, such as the use of G2P or G2B. And central bank digital currencies would be very helpful in terms of facilitating cross-border transactions, and also in terms of eliminating some of the excessive market power of private players, and also in terms of sometimes there are those gray areas of cryptocurrencies that are might be used in illegal activities, drug dealing. So central bank digital currencies is going to help that. And also in G2P, for example, with the use of central bank digital currency, there will be transaction data generated, and potentially it would help in terms of better targeting the vulnerable sectors and people. And of course, provision of cash in, cash out is very important for emerging economies, and especially the lower income groups in emerging economies who might lack access to digital infrastructure and digital payments. For payment providers, they should leverage the latest technologies in cybersecurity and constantly upgrading, and never be lazy about it. And recent technologies that they could leverage includes things like 5G, blockchains, or biometric ID. It's very important also for them to it's also very important for them to constantly upgrade, because it's pretty much like a match, winning a match between them and the criminals. And also they should engage in knowledge sharing and standardization, of course. So finally, I'd like to just briefly talk about the recent development in cross-border payments. The G20, the G20 at February is actually putting this cross-border payments, enhancing cross-border payments, as a very important thing in their agenda. So, and there are some studies for policymakers to consult in terms of the steps that they could take in order to enhance cross-border payments. So this is something that is probably worth mentioning as a reference. So this is all that I all about this presentation, and thanks very much for your attention, and I'd be very welcome your feedback. Thank you.
Thank you, Yao Ling. That was a very nice and packed presentation. That research work by Yao Ling was done in the last 2 months. She joined our division as a research intern in June, and I'm very happy that by now she has really presented a very clear description of the fintech payment landscape, conducted some quantitative analysis in terms of what's its contribution and benefit in terms of the experience of China as well as the other countries, and then concluded the presentation with some nice policy recommendations. So now I'll turn over to Peter, who will moderate the peer review and panel discussion. Peter, the floor is yours.
Good morning, everybody. Also from my side, and thanks Yao Ling for this wonderful and comprehensive, rich presentation. Give you a few information about the panel discussion now. So this RCI pod today focuses on the research paper by our intern Yao Ling, which already delivered this wonderful presentation. And we're very happy to have 3 distinguished experts in that area invited to directly comment on the paper and the presentation by sharing their knowledge. That's the first part of the moderated discussion. And then I'll give Yao Ling the floor to respond to some of the comments. But later, subsequently, we of course can also enter more of a general discussion on this topic, which is highly relevant for Asia, for ADB, for finance sector development more generally in the region. So therefore, everybody who attends, you may already think about possible questions, and you can already type them into the chat box if you like. If not, there will be soon the opportunity to raise your hand, and I'm most happy to call you, and then you can directly ask your questions. So let's move to the discussants, and we are, as said, we are really happy to have 3 of those. First, we have Peter Morgan from ADBI. He's senior consulting economist and vice chair of research at the ADBI, and in fact, he has really a lot of experience, like 20 years of experience in the financial sector in Asia, most recently serving as Hong Kong chief Asia economist for HSBC. For instance, Peter's research interests are in macroeconomic policy, financial regulation, financial development, financial inclusion, FinTech, also payment systems, financial literacy, and financial education, and he earned his PhD from Yale University. After Peter, we have Dr. Joselito Basillo from BSP. He is currently Deputy Director at the Department of Economic Research of the BSP, and there he heads the Financial Markets Research Group, where he's involved in the preparation of research, policy, and position papers at the BSP in identifying areas of macrofinancial modeling, monetary policy, inflation, and liquidity management, as well as financial sector policies, data, and statistical learning methods. Before joining BSP, he worked as at the National Economic and Development Authority and the National Anti-Poverty Commission. So we are very happy to have BSP here, who, for instance, also have digital payment systems running, such as InstaPay and PromptPay. By the way, Joselito finished his PhD study at the University of Illinois in Chicago. And then lastly, we have a colleague from ADB, Mr. Jake Lee. He's financial sector specialist in digital payment infrastructure at the Sustainable Development and Climate Change Department, SDCC. In his role, he's responsible for fostering financial inclusion and developing innovative financial services in Asia and the Pacific. Before joining ADB, Jake worked at Korea's KFTC, which is the Korea Financial Telecommunication Clearance Institute, as a payment infrastructure specialist. And Jake holds a master's degree in business administration and management information systems from Texas A&M University. So as you see, this is a very nice, diverse set of experts. And without further ado, I'd like to call Peter Morgan from ADBI to start this discussion. Peter.
Hey, thanks very much, Peter. I'm delighted to be invited to participate as a discussant on this important topic. Just a word of warning, my internet connection is not very good this morning, so if I fade out at some point, please bear with me. Let me share my presentation now, if I can get this to work. So I think this is a very important topic. FinTech has great promise to help promote the goals of financial inclusion, but also, as noted by Yuling, presents numerous challenges, including the need for adequate financial literacy and consumer protection, data security risks, potential for widening of income and wealth gaps, maintenance of financial stability, and the need to balance innovation with regulatory obligations. And to take from the paper, it says the aim of this paper is thus to provide a comprehensive empirical assessment of the growing penetration of digital FinTech payment systems, their impacts and challenges, and reflect on ways for improvement. So it's quite an ambitious scope of the paper. My overall comment is it presents a nice overview of many issues on this topic, but I think the regressions are problematic, and some of the arguments need to be strengthened. So first, talking briefly about the introduction, I think maybe there's a bit more need to distinguish between the card-related digital payments and some of the more recent innovative developments such as Alipay and WeChat. They are actually rather fundamentally different systems. I think in terms of that first chart on the FinTech parts of the payment systems, I think some would exclude internet banking, but I think probably e-commerce should be included in a more explicit way in that the first figure. I think for the reader, it would be helpful to add some definitions of various FinTech categories, and also the literature review was not yet present, at least in the paper. And in terms of the stylized facts, there are a few sort of strange things in the charts. For example, in the third stylized fact, the average value for checks in EMEs was something like $18,000, which seemed a bit strange. And also, another chart, the average value per transaction was higher than the overall average for the individual categories. And the last figure, just to comment that the scales from 2014, 2017 should be the same, so you can get a better idea of the trend there. But going on to the regression work, which I think is the most important part. First, I was a little bit puzzled on the definition of this PKU DFIIC payments index, because in the chart, I think on slide 19, it showed units as millions of yuan, but the components seem to be more either transactions per individual or something like that. So I was a bit confused there. The dependent variable is e-commerce sales and purchase value. I wasn't quite sure what the distinction between sales and purchase value was, and why you would combine them. And then on the explanatory variables, you have the payment index, GDP per capita, share of rural population, share of population age 65, and number of broadband subscribers. But to me, the most problematic issue is the definition of the payment index itself, because it seems to me that the payment index must mostly include e-commerce transactions. So it seems to me that you have essentially e-commerce or payments on both sides of the equation. So I'm not really sure what that is telling you. And also, it's likely that some of these variables like e-commerce have strong time trends, probably very non-stationary. So there are potential issues of spurious regressions, that sort of thing. And I think it might be helpful to try to normalize the dependent variable in some way. But I think my main issue there is just what is being compared in the payment index with e-commerce. And then the second step was the instrument of variables. I wasn't very clear why the insurance index was a good instrument of variable. It seems that it would still be correlated with e-commerce, but I think the main issue still is the payment index variable itself. And then going on to the study of the FinTech products, we had the payment index being very significant. GDP per capita being significant but negative was a bit strange. And the number of broadband subscribers was also significant but inconsistent signs. So that seems a bit odd too. And again, some of the other issues as mentioned before. And then going on to the cross-country study, here I think the issues are more or less the same. The dependent variable is the e-commerce sales value, and the main variable of interest is the percent making digital payments. But again, presumably those digital payments are mainly e-commerce, so I'm not sure what is being shown there. And again, there could be issues with lagged effects, lag-dependent variable, that sort of thing. And then on the discussion between about the relationship between digital payments and the informal economy, the paper documents this relation shown in the BIS study. But I think it would be useful to give a definition of the informal economy, which is more to do with do you have company employees outside the family? Is the company registered? Does the company pay taxes? It's not clear that those are so directly affected by the availability of a fintech. And for example, there's the famous example in China that even street vendors have QR codes, but that doesn't necessarily mean that they have an incentive to be part of the formal economy. And the problem again is that use of digital payments is correlated with lots of other indicators of financial inclusion. So I think it's very difficult to necessarily point to this as a key factor. Challenges and policy recommendations. I think a couple of others that could be mentioned is the risk of overborrowing because of access of fintech lending, and also use of AI could lead to discriminatory lending and other practices. In terms of the policy recommendations, I think those are generally fine. We've been promoting the idea of digital financial literacy as a very important aspect of dealing with fintech. One thing that was mentioned in the paper was this maintenance of the ability. And also there was some suggestion of the desirability of introducing central bank digital currencies, but I'm not sure if that's a priority. That's still pretty controversial. So I think I just skipped this page, but I think in general it's an ambitious, interesting study, but it needs to be cautious about the claims. The regressions are problematic and certainly very far from establishing causality. In fact, it's not clear to me what they are adding in this case. Some of the arguments based on simple bivariate correlations, which are not very convincing. And the text states in sections 2 to 4, we discussed how fintech payments make retail payments cheaper, faster, safer, transparent, and inclusive. But the analysis in sections 3 and 4 is basically just correlations, not benefits. And then finally, I think the discussion of G2P and G2B and COVID-19 is still pretty limited. So it's a question of whether those should be expanded or not. So let me stop there. Thanks very much.
Thanks so much, Peter, for these comprehensive comments, which will certainly really help to further this paper, to add some value towards finalization. May I call on now as next discussant Dr. Joselito from BSP? And I think we will share the slides from our end, if I'm not mistaken. Mara, Carol?
Thank you, Peter. So these are my slides for this discussion on Yao Ling's paper entitled Advancing Asia's Payment Systems Through Financial Technology. So again, the same. I have the same general comment that is a comprehensive paper that contains a lot of ideas, studies about fintech, and how it relates to many other factors affecting the payment system in an economy in general. But just to recall the highlights of the study, first, the study focused on retail payments and then proceeded to some stylized facts. For example, for facts number 1 to 4, there's growing importance of digital payments, and it has increased in importance, especially the use of card and e-money. And then along with e-commerce, e-money and mobile payments usage are increasing despite the relatively small average value of its transactions. And then the paper proceeded with an empirical exercise, doing a case study on China, and then empirical results showed a positive impact of fintech payments on e-commerce and on some general fintech products. And then and then the paper proceeded to conclude that payment system was generally contributory to fintech development. And then there was this cross-country analysis that revealed the importance of fintech in e-commerce. For the next 2 slides, can we go to the next slide, please? Mara? Hello?
I'm on slide 4.
Okay.
Slide 3.
Slide 4, please.
Okay. It's up already, sir. Slide 4.
Okay. Okay, so in slide 4, um, I make some comments on fintech and the payments landscape. Of course, in general, the 10 stylized facts are something similar to the conclusions that you can get if you look at the BIS Red Book on statistical updates. You have the usual decline in physical presence of financial institutions, but then increasing use of e-money and mobile payments. But then, when we talk about landscape, in the past, we only have to show these 10 stylized facts. But because concerns about fintech have increased already and usage, there are now many other factors or interesting data that we can talk about when we say fintech landscape. So number one of those are on stability issues. So that means I think it was raised also earlier. That there are concerns about, for example, risk management and liquidity issues of payment service providers. And then, of course, you have the data protection issues. I think this was discussed in the paper a little bit towards the end. But then now we have those regulatory issues. And then something that could be interesting are the motivations behind digital transactions. Why would one choose e-payment against cash? And then, of course, challenges of inequality. But this one was discussed earlier. And then if I can move on to the next slide, I show table 2 results of the paper. In general, the study employed a panel data approach, which is a good way to go because that means controlling for multiple factors and reducing issues of indigeneity. So in general, the data set has a bigger N and small t. Study also conducted a 2SLS estimation using fintech insurance as an instrument for fintech payments as an explanatory variable for e-commerce. But then let me show some of my comments in the next slide. In the next slide, I say that in the first bullet that for further analysis of the data, interaction variables can be included in the panel data analysis. And this would mean helping identify regional differences, not just in terms of fixed slopes per region in China, but also in terms of the magnitudes of the coefficients. And then, of course, in addition to the formal tests of homogeneity and relevance, a test for model over identification can help to add robustness to the results. And then, of course, given the possible feedback, not only of uh, feedback between e-commerce and payments, but there could also be feedback within GDP and e-commerce, given the fact that e-commerce is in fact probably part of GDP, then an additional instrument may be accommodated in the same model. In the next slide, I show table 3 of the paper. Table 3 provides results on the effects of the independent variables on fintech development, but the emphasis was on how payment index affect fintech developments or fintech product types. So there were five product types: insurance, money funds, credit investment, and credit investigation. My comments are in the next slide in the form of question. For example, I would like to ask, what was the basis for the choice of the five types of fintech products? Are these the most popular ones? Are these the most important fintech indicators of fintech development, in order for the study to conclude that payments in general contributes to general fintech developments? And then why not perform in this case also another type of IV regression, given the feedback effects between the variables? And then may I mention that in the PKU index of digital financial inclusion, where most of the data came from, there are two types of credit. So it might be worth mentioning which credit was used. And I'm assuming it's the credit that is under depth of usage in that library of indexes in this publication of Peking University. Um, Let me also mention an additional comment on this. It was one possible result for having a negative relationship between GDP and fintech services is that the author explained that fintech services are replacing traditional financial institutions in more impoverished areas, where the provision of such services by formal financial institutions is rather limited. If this is true, then fintech services should have a positive relationship with the other variable named share of rural population. However, this was not the case because share of population has a negative, generally negative um, relationship with the dependent variables. In the last regression analysis that I would like to comment on, which is table 4 of the paper, and this is slide number 11. Um, there was this cross-country analysis that revealed the importance of fintech in e-commerce. Again, we can say the same story, or the same comments, that there should be a use of instrument variables in order to accommodate or to reduce the indigeneity issues. But then, to probably address some of the issues, maybe some of the suggestions that we can test in the empirical exercise are the following in slide number 12. For example, remittances were highlighted towards the end as particularly relevant for developing countries. And potentially, this can be a factor that can be used as a control in the cross-country regression for better insight. And then with GDP not being significant in the cross-country regression, then maybe other proxy variables can be used from those in the global Findex database. So for example, in that global Findex database, you have usage of internet to pay bills or buying something online in the past year. And that could be a proxy for e-commerce. There's also another variable that's paid online for internet purchase, then that can be a good proxy for e-commerce. And at the same time, as a proxy for GDP per capita, we can use received wages in the past year. So the scatter plot in this slide gives us use of internet payments as generally positively related to wages. So in this sense, uh, there could be possibly, we could imagine some positive results or positive coefficient between GDP and e-commerce. Those are the comments on the regression analysis, but then if I may conclude now, the paper actually demonstrated a data-driven approach to the empirical assessment of the benefits of digital fintech payments. And we can see that the combined use of empirical exercises and the richness of collected data has helped show some relatively significant impact of fintech payments on e-commerce and other fintech products. And thus, if I can show it in an arrow in this conclusion, in the third line, after the second bullet, payments has an impact on e-commerce and selected financial fintech products that can lead to fintech developments. However, the comment is on the last bullet. The goal of the study, or as the title of the paper tells us, advancement of Asia's payment system can be made through financial technology, which implies the reverse, which means that fintech developments or fintech technology can help advance payment system. So there could be probably some reformulation of or restatement of the goals of the study at the beginning or in the title of the paper. That's all. But overall, there are many good insights, especially on the part of policymakers and researchers on fintech and how it affects our financial markets and the economy in general. So thank you for this paper and this study.
Thank you very much, Joselito, for not only very, very insightful comments, but also a vast list of very good suggestions that will certainly be, considered and really, really useful. Thank you very much for this thorough discussion. So last discussant is my colleague Jake. Jake, would you mind starting? You also have around 7 minutes, and you share your screen, right?
Yes. Thank you, Peter. This is Jake. First, thank you, Yelding, for your valuable presentation, and also thank you, James and Peter, for giving me this great opportunity to review this paper. I would like to begin with giving my general comments. We can summarize the character of this paper in 3 points. First, this paper has conducted an in-depth analysis of how fintech-based payment instruments affect efficiency, transparency, security, and network effects of existing payment systems. Second, the author tried to look at both the positive and negative effects fintech-based payment systems have on existing payment systems. Lastly, many insightful recommendations were offered for governments in DMCs for enhancing digital financial infrastructure, including payment systems. Regarding Sector 2, I would like to mention 2 recommendations. On page 16, the author has emphasized the key implications of fintech payments in terms of convenience, access, and transparency of small value transactions, and the author mainly used Fact 4 and Fact 5 as the evidence of this. However, when I reviewed Fact 4 and Fact 5, it was a little bit difficult to find specific or direct evidence strongly supporting the author's opinion. In particular, in terms of Fact 4, the author seems to think that the lower the transaction amount by payment instrument, the higher the convenience, accessibility, and transparency of the payment instrument. However, it is difficult to say that the smaller the value per transaction, the higher the convenience, accessibility, and transparency of corresponding payment instruments. So I would like to recommend to provide further detailed explanation and the specific data or evidence for the author's claim. Regarding fact 5, the author used the increase of mobile money transaction volume as the evidence of its contribution to financial inclusion in developing countries. I agree that it is reasonable data to support the author's opinion, but if the trend of mobile money users is added, the author's argument could be further strengthened. Now I would like to mention about Sector 5, challenges and policy recommendations. As I already mentioned, the author has provided valuable recommendations for governments in DMCs to apply for enhancing digital financial infrastructure, including payment systems. I would like to give a couple of humble comments and recommendations to support the author's good suggestions. First, the author said that increasing interoperability between platforms is a way to maintain sufficient competition between platforms. I totally agree with this opinion. In fact, interoperability plays a positive role in terms of not only maintaining sufficient competition between big tech companies, but also providing a fair opportunity for small fintech companies against existing financial institutions, and providing more convenient services to customers under a demand-driven market. In addition, interoperable payment systems play a big role in building a healthy digital ecosystem through active participation of various suppliers and consumers. If you emphasize this aspect a little more, the content will be much more enriched. Second, some countries have shown a tendency to strengthen their supervisory systems for mobile money transactions as one of the measures to enhance transparency of digital payment systems. In 2017, China established Net Union Clearing Corporation, which is the operator of China's nationwide centralized platform for the processing of online transactions undertaken by the country's non-bank payments providers. All payment transactions through non-bank payment service providers, including Alipay and WeChat Pay, are recorded in Net Union, prohibiting the discretionary use of non-financial institutions' funds. Before Net Union establishment, the service providers' fund flows was unclear, and some service providers were likely to internalize the customers' funds. Therefore, I recommend adding this institutional reform trend to the paper as a separate section of policy recommendations. I believe that this trend will help other DMCs design the digital payment infrastructure roadmap in the short term and the long term as well. The author mentioned the need to provide both physical and non-physical digital infrastructure for effective and efficient payment systems. I totally agree with this recommendation. Payment is only one part of economic activities. In order to effectively activate digital payment systems, it is necessary to simultaneously digitize other sectors, such as public administration, in pace with the development of digital payment system. But each country's circumstances, such as economic conditions, culture, and digital infrastructure development levels, are all different. Such differences must be taken into account when pushing for effective spread of digital payment services. Digital payment systems related policies should be established based on such diagnosis of countries' unique circumstances. By doing so, more effective digital payment systems and the spread of digital financial infrastructure can be expected. In the table on this slide, I have categorized the development level of each country's digital payment infrastructure into 3 stages and address issues that need to be considered for each stage. My last comment is related to regional cooperation. Many governments and private sector players recognize the importance of cross-border financial infrastructure integration. According to the World Bank, we can expect reduction of transaction costs and end user costs, improvement of accessibility, and increasing opportunity to share resources and capabilities among countries. Under the COVID-19 situation, many DMCs recognize innovative cross-border digital payment infrastructure, including remittances, as a key enabling factor for securing their domestic financial resources. However, the connection and expansion of payment systems between two or more countries is not so easy. In order to connect payment systems between two or more countries, all stakeholders in different countries must be satisfied with the services and systems. Before I joined ADB, I worked at Korea's National Payment and Settlement Agency, and I was in charge of providing cross-border payment services between Korea and a number of Southeast Asian countries. Whenever we launched a new service, we had to consider diverse issues related to infrastructure, policy, customer, and service providers. The table below is what I had to consider when launching a new cross-border service between Korea and other countries. In this regard, I think ADB's role as a facilitator for promoting regional cooperation in cross-border payment system connections must be strengthened, especially under the COVID-19 pandemic situation. Connecting and expanding cross-border payment systems play a key role in improving regional cooperation. However, since there are many stakeholders involved, an institution that coordinates and arbitrates different views held by multilateral stakeholders is needed. For your information, FSCG is currently supporting IRM to connect payment networks between India and Korea. If you need FSCG's help regarding cross-border payment networks, please let us know. That's all from my end. Thank you.
Thank you very much, Jake, for your wonderful and insightful discussion. So really, I think we really achieved having a very diverse set of discussants, with each of whom offering a different angle from policy, from background experience, from own work exposure, from research experience. So I think that is really, really rich and very, very much welcome. Thank you once more very much. Since time is already at 10:20, I don't think we have many rounds. So I'd like to give participants the opportunity to raise their hands if they have another comment to raise at this point. To ask either one of the panelists or Yuling directly or comment. So that would be now the time. If somebody has a comment, please type in the chat box or raise your hand. If since I do not see hands raised, then why don't we go back to Yuling? Of course, Yuling, this is very rich and very, very useful. You won't be having time to address all of this now, because many things one needs to digest first also. But I think what would help is if you can shed a little bit more light on the data, particularly on the payment index. I think there were some very important points raised by Peter Morgan in his first discussion. That I think if you just shed a bit more light on what this index is, what are the components, that would probably help alleviate some of those concerns.
First of all, I'd like to thank the panelists. Thanks, Peter, for help, pointing out of some of the things that are probably not as very clear. And thanks, Joselio, for your suggestions on the empirical strategy, and very helpful. And also thanks, Jake, for your enrichment of the policy recommendations. I also learned a lot of the things, a lot of the policies, and I think they're very helpful. So I also, based on Mr. Morgan's comments, I think I need to probably clarify a little bit on the data. So for the PKU DFIC data is essentially, so what they did is that they collect, so they used the data from Ali Ant Financial's massive database, and Ant Financial is the provider of Alipay, and Yuebao and Zhima Credit, which is for credit investigation, and Fortune. So what they did is that they have that database so that they can come up with information on the provinces. Say, for example, what's the number of Alipay's payments per capita in one province in China, and they have that for 31 provinces in China, just excluding Taipei, China, Hong Kong, Macau. So they have that for the rest. So for they have a bunch of different measures, indicators that could indicate the extent of payment penetration, the number of payments per capita, amount of payments per capita, and proportion of high frequency users. So these are the three variables, indicators, and then they use a AHP and coefficient of variation. They combine this subjective weighing matrix approach and the objective weighing matrix approach, so that they could come up, so that they weigh each indicator and then come up with an index for payment, and that would be the measure of FinTech payment index. And this is the measure that we use here in the paper. And similarly for other measures, like insurance index is going to be the number of insured users per Alipay users, number of insured insurance policy per capita, and the average insurance amount per capita. So these three, for example, these three indicators, and weighing using some weighing scheme is going to give a province level insurance index. And similarly for money funds, they're going to use Yugabao's purchases per capita, and value of Yuebao purchases per capita, and number of those who have purchased Yuebao per Alipay users, and use that and combine and weigh appropriately and to get a money funds index. So after they so the measurement is an index, and of course that index is, of course, it's very probably hard to as I said in the presentation, to really map say the coefficient into say number of use of payments, but we can only map it to payment index. But then I also provide an extent to which like the extent of potential like of this, how this payment index is evolving. As we can, I said the cross country, the cross province average in 2011 is approximately 50. So that index is approximately 50 in 2011, and it reaches 2018. In 2018, about 260. So that grows approximately 460%. So we have that index for different provinces and from 2011 to 2018. And that probably with that we can speak in China. So speak within China, for example, how that is how payment is affecting, say, e-commerce. So that's the and also I think Joselito was like saying something about the choice of FinTech services. So so basically it's not really, it's basically, I think, all that PKU has, all the categories that PKU has in their data, so that they can come up with that index. So and for FinTech services, I just use all the available financial services indicators, indices from the PKU data. So in order to be as comprehensive as possible. And and also
Yuling, would you mind? I'm really
yeah.
sorry. Would you mind taking another minute or so to finish your reply?
Oh yes, sure. And also for the informal economy that was mentioned, I think so basically it was also coming from a multi-indicator, multi-determinants approach. So there are a lot of, it's very difficult to define. So I took this estimate, and also this is the one that BIS took, is from a study that combines a variety of determinants and potential indicators of informal economy to estimate the size of the informal economy. And there, of course, causality is difficult to establish, but there are reasonable ways to like think about how that could be reduce the informal economy, in a sense. For example, especially the how this is generating a lot of data, and keeping them on the database is gonna probably we would be able to reach out those who are probably unable to be, who are hiding from, say, official data. Now the government could aim to collect that and potentially collaborate with FinTech providers, and then they can know these people who used to be in the informal economy. So, and I really appreciate a lot of the feedbacks and suggestions, and I think I'm gonna probably definitely incorporate there's some new instruments, and also probably an assessment of the fees associated with fintech payment platforms, and also enrich the policy recommendation section. And also I appreciate this opportunity a lot, and I would, if you have any suggestions related to the empirical part or anything, especially like the suggestions or instruments Joselito provided, a lot of very helpful ones that I'll definitely try. And if any of you like have nice instruments in mind, and I would be definitely very happy to hear. Thank you very much again.
Thank you, Yuling. And so I think it's time to end this moderated panel. So I really had a lot of questions prepared for all of our panelists, which I think would have been really, really nice. But it's, I think, just one more reason to think about possible future events in the same vein. But thanks again. And I think I turn over to James now and close here with the moderated discussion and panel.
Thank you, Yoling. Thank you, Peter, and thank you to all the paper reviewers. Nothing is worth more than really a lot of good comments, and it's timely because Yoling still has a little bit over 1 week to finalize the paper. So we will circulate the revised paper to you as well, probably in due time. Meantime, we've exceeded by 2 minutes and we're about to close, and I think next week, you will again catch our CI Pod for our 10th webinar on capital flows in the time of the pandemic, which will be delivered by our colleague, Rogelio Mercado, who recently joined us. So again, thank you everyone and keep safe. Bye-bye.
Thanks. Bye-bye.